Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. Obviously, I'm going to share my financial opinions as we go through it. It's going to be commodity, wealth building, or financial topics that I mainly cover. So let's dive in here. Let's see what people are talking about, and I'll share my opinions with it. At finding_finance if you want to follow me, and finding-value.com if you want to join our community where we share individual companies, sectors, stuff like that. There's a discount in the description link below. So $150,000 a year with a 1 hour commute or $90,000 per year work from home. Benefits equal. What are you picking? So, I'm going to say this. This is what I'll say. And some people asked me this before um, when I was at my other job and stuff like that. If you save enough money, you invest, you get dividends, you get other income that is outside of the 9 to 5 job, then this becomes less important, the actual difference in money. So you start evaluating things completely different, not based off of what needs to be done to meet the bills. It's based off of a lifestyle that you want. Right now, me currently, uh, I could work right now a 9 to 5 job if I wanted to, but I don't want to even work a 9 to 5 job. Not at 150,000 K with a 1 hour commute or a $90,000 work from home. Now, if I had to choose between it, I would choose the $90,000 per year work from home because the 150K with a 1 hour commute, depending on how long you have to be there, the jobs that I've generally have taken, you don't get a paid lunch, even though your salary it's not included. So they're going to say, let's say if it's an hour commute and you start at 8 o'clock, and let's say you work till 5 o'clock, and that's going to be 6 p.m. I would much rather take a $90,000 per year work from home. Now, if you can move that 1 hour commute, or if you could do something with the commute where you can work like a 7 hour day, 1 hour there, 1 hour back, and you could pull that off, maybe that would be better. Maybe. But again, I I would probably choose work from home. And I never worked from home when I did my 9 to 5. But having freedom, well, it's not pure freedom, but having more freedom and more time freedom is more valuable than money itself. Then you want to get yourself a plan. If you're making 90K or 100K or 200K, whatever it is, make yourself a plan to get the heck out of the 9 to 5 job if that's what you want. Or if you want to work starting your own business, start your own business then. Make a plan to save money to give yourself more options than maybe just these two options. I know I've talked to people at work, other people, and I'd say, why don't you work somewhere else and make more money? They stayed where they were because the job was easy. It wasn't very stressful. It was pretty lenient, and the benefits were pretty good. So that's other people's opinions that I used to work with. And then it highly depends on the position that you're in. Other people left because they didn't like the position they were in. It was too frustrating, annoying, or whatever. And now they work from home and get 80 or 90,000 in their mid 20s, late 20s. And they like doing that. So money isn't everything. And the culture of the company, the people that you work with, your boss, and the way how much they understand. Maybe something goes wrong if they're very understanding versus someone who's not understanding. It goes a long way. I'll just say that. No experienced investor uses Robinhood. I have used Robinhood before just to try it out, and it is garbage. Agreed. It's horrible. Study successful investors, and you'll notice a common denominator. They are masters of psychology. They can't control the market, but they have complete control over the gray matter between their ears. Morgan Housel. I agree with that. They are a master of psychology, and that's what I'm trying to get better and better and refine my entry points and continue to hold longer and longer and longer. Holding through the entire cycle is what I am trying to do. I'm also looking at a lot of other things than just, trying to make an absolute gain. You have to look at taxes. You have to look at the accounts you put money into. How are you going to play this thing? What are your goals? All of that comes into play. I know a lot of people are like, well, I'm going to try to trade in and out. And you've got taxes, you've got all sorts of crap that you have to start to deal with if you are trying to play the short term. And the majority of short term traders, they don't make crap for money. They don't make crap. At least that was my experience in the past. I make a lot more money doing buy and hold than I do trying to time the market. But timing the market is generally less experienced investors, people who don't have as much money. They think they can do this. They think that being nimble and moving in and out and doing something every day adds to the returns. And what I'll say is that is not what I have observed. Those who are more patient and don't touch their account is they generally make more money, a lot more money, like not even close to the same amount of money. Society tells you to spend, show off, and consume. Instead, you should, and I never say you should, but this is what this is saying, pay off credit card debt, build up an emergency fund, invest in appreciating assets. Don't go broke trying to look rich. And I would agree with that. One thing I will add, and I know we talked about this during a Q&A just for a brief period. Um, you're going to change as a person if you accumulate enough wealth. So um, I'll just say this: if you're in a lot of debt, paying off your credit card debt is a huge uh, it's a huge goal. If you have credit card debt, get rid of it. Like pay it off, get rid of it. Don't go into credit card debt. You will be a different person after you get out of debt. Then, once you save an emergency fund, I would say at least 3 to 6 months. If you get to 12 months, good for you. Whatever you feel comfortable with, you're going to be even a different person after that, because what it does is it gives you cushion. It allows you to say no to things. You're not going to be desperate. You're not going to go from job to job, having to take the worst possible outcome of, or the worst. You'll take any opportunity that's available, that whether it's good or bad, just to meet the bills. And then it says invest in appreciating assets. And I think the biggest hurdle for me is, you get out of debt. I never really got into debt, so I was good there. You build your emergency fund. You start living on your own. You're doing all your things yourself, which is incredible for most people. And then once you get, I would say, to like $100,000, it gives you a cushion. It doesn't matter where you invest it, but you get to your like first 100 grand or so, it feels good. You got a cushion. It's like a little taste of what FU money tastes like. It's just a little bit. And then people say, well, how much money do I need after that to basically drop a 9 to 5? And I'm going to say, for me, this is gonna be different for every single person. It depends on your dividend income or other incomes that you have outside of your 9 to 5, which you should be generating if you have a 9 to 5. Get more income. Get more income. Invest. Get dividends. Buy a real estate. Do something in real estate if that's what you're into. Whatever you're into. But I would say, when you get around 600, 700, $800,000 outside of your 401k. And let's say you've got a 401k that's been going for all these years, but I'd say 6, 7, 800,000. That's a pretty big cushion to cushion yourself against something. If you wanted to start your own business or if you wanted to go off, but I mean, that's kind of my feel. There's no real um, number here. Another thing is it depends on what your expenses are and how many people it depends what the expenses are. And if you can lower your expenses, maximize your income, invest the difference, get multiple revenue streams to make you more resilient against a job loss if you have a 9 to 5 job working for someone else, that is resiliency. And resiliency will change you as a person. You will not be dependent on the job to the same extent as you would be if you set up your life properly. Another thing to look at is how can you reduce your expenses? What I did is I locked in my house, I refinanced it, and I have a very low mortgage. That's one thing that I did. Doesn't mean that that's what you're going to do. Doesn't mean that that's the answer for everyone, but that could be an answer for somebody. I think a smart person in their 20s, let's say your early 20s, you save 100 grand or something like that. You buy a house, you have your friends, you rent to your friends, a couple of rooms out. You're building equity in a house. You've locked in a mortgage payment that hopefully is very low, or you can refinance it depending on where your equity's at and where interest rates are at. And then eventually, as you get older, those guys will probably move out, and they were help paying off your house, building equity in the house, and covering some of maybe even your expenses. You're dividing the utility bills up. You're doing all that stuff. You're saving money, and hopefully you can get more dividend income and all that stuff from investments, which is making you a lot more resilient. That's what I'll say. Temperatures plunge to historic extreme low records as severe cold front impacts most of China. I didn't know that, but maybe that's going to increase their liquefied natural gas demand. I don't know, but extreme low records. The Fed has apparently given up on even attempting to send a coherent message to markets. I find this highly funny because I was reading, I'm like, okay, let's go back to 2020 and 2021, right? They said, we're not even thinking about raising rates. And we had the fastest rate hike in history. What was that? Now they're going back and forth between, oh, well, we're not gonna lower rates. Well, maybe we're gonna lower rates like 3 times. Well, maybe we're gonna lower rates. Maybe we're too constrictive, and they're going all over the place, guys. And I'll be honest here, it's ridiculous. These guys need to get their super high intensity training SHIT together because I don't know what the heck they're trying to send here. I have no idea what they're doing. I don't know if they know what they're doing. So I thought this was a pretty funny message here about the Fed apparently giving up on attempting to send a coherent message to the markets. Lawrence McDonald, he posted this up, and I thought this was very interesting. So since the Fed meeting, right before the Fed meeting, all of these ones right here outside of the Russell, we had positioned on the community, the website. We're in palladium, steel equities, oil, rare earth metals, silver, and platinum and copper. I'm like, these are all the best performing areas since the Fed meeting. And I just find it funny because it's almost like you could see the charts were all turning for the Fed to come out with this news. So the charts and the way that the insiders were positioning before this move, before the Fed meeting, they were all positioning in these areas before they announced this. So they knew what was occurring beforehand. So what you want to see and what the charts can tell you to some degree beforehand is the positioning of big money. They may not tell you what they're doing, but you can see it in the charts in falling wedges, in things that are coming back to support levels that are starting to get purchased up in all these different areas. Okay, so let's read this. It says, in your 20s and 30s, it's easy to be healthy. That's why the status symbol is wealth. In your 40s and 50s, it's easy to be wealthy. That's why the status symbol is health. And I was looking, there's I'm not looking. I read a lot of comments about younger individuals and like they want a Lamborghini, they want all these things, but they're all young. They're all in their 20s and 30s. And after reading this, I'm like, well, that's true. I'm in my, I'm early 40s, and I would say people my age-ish are on the wealthier side. And the status is health. I mean, if you're in very good shape, if you are strong, and you don't have any problems, you're not taking any medications or anything like that, that's like your wealth symbol. Like that is how you made it. That is what I mean. That's why I don't really care about buying crap. It's like it doesn't matter. Uh, and I've always been like that to some extent. But as you get older, it's like you don't want crap in your life. You just don't want it. It's an extra bill, it's an extra maintenance, it's an extra hassle. You have to store it somewhere, you have to move it to vacuum around it. Mental clarity is a clean room with not much in it. That is the saying, to clean your room or whatever. Really, what that's doing is it's an extension of your psychology and how well your psychology is laid out, how mentally well laid out you are. So if someone's really well laid out or they want clarity, you'll see a house and it'll be empty because that's what their mind is. They want it to be empty. They want it to be free. You want freedom from stuff. And I think that's the highest order of success is to have clarity and calmness. So when I think of something, I don't think of minimalism. I just think of something that's not crowded, something that's not congested. And that is mental clarity to me. So that's what I look at when I see a room. When I see a room that's dirty, filthy, and disgusting, that's the mental state of that person. And kids are generally very unorganized because they're not organized mentally yet from a psychological standpoint. So that's that there. It says better than any sales. Save 100% when you don't buy anything. Here's another thing, and this is just me. You guys, I don't know if this helps you, but this is me. This is how I made all my money or whatever. Uh, there's very few things that I like to purchase. I don't go and just buy things. I'm not a tech guy. I buy things because I need them, and the only thing that I really like that I spend money on is car stuff. That's about it. Everything else, it's like I don't really care. I don't care about my clothes. I don't care about the name brands. I don't really care about most anything. And if I hang around people, or if I'm around people that really care about what car they own and the stuff that they wear, I'm probably not going to be friends with you just because like I just don't care to talk about that stuff, and I'm not trying to compete with anybody. I love talking about ideas. I love talking about um, the engineering or designs, or maybe even partially artwork if it's abstract type stuff. But I'm not into playing that. Who's better? Look at me. I don't even really care about like trying to attract the opposite sex based off of buying crap. Like I just don't care, and I don't even want girls or anything like that or the attention from that. But but yeah, that's kind of my take there. When there is only one bidder for a house, the buyer has all the power. When there's more than one bidder for a house, the seller has a lot more power. Western commodity markets equals the only bidder for the house historically. It could be important. Let's watch. And more people in the emerging markets are starting to go after commodities. And when commodities get scarce and you have multiple bidders, that's when the price goes up. The seller has the advantage, is what he's saying. So London Metal Exchange plans to launch new metals contracts settled against prices from Shanghai futures exchanges. Get ready for precious metals and commodities to start competing for exchanges and to move to other markets, not just London and America, the New York COMEX. The unseen energy tsunami, AI's ferocious appetite for electricity set to dwarf EV consumption. And that is something that I don't hear a lot of. The ferocious appetite for electricity set to dwarf EV consumption. And think about the third world countries that are going to start to adopt um, more electricity use, refrigerators, TVs, air conditioning. Electricity use is going to skyrocket, guys. This is an easy play, in my opinion. So how are we going to generate all this electricity? I think it's going to come from natural gas, coal, and then eventually nuclear. Nuclear is going to have to come into play. There is no way. I mean, I don't think there's a chance that renewables can provide any sort of electricity generation power over time. It's just too much electricity demand versus the supply. I mean, we've spent many, many trillions and we've only offset a few percent of fossil fuel. That is it. So with AI coming up, it's going to suck down a lot of electricity. Your ultimate success or failure will depend on your ability to ignore the worries of the world long enough to allow your investments to succeed, says Peter Lynch. It's a good quote. The freight market starting to tighten. Step one of economy firming. Lap the destock at constant demand, and you start to restock. Inventories in a better place, lower rates. Hold even more inventory. New orders are up. New housing about to boom. You got that right. Biz cycle is in motion, and PMIs are going to be higher soon. So we're starting to see the freight market start to tighten, which is step one. So that's good for the economy. Corey says, I'm a millionaire and you wouldn't know it if you saw me on the street. My car has 90,000 miles on it. I don't own a lot of stuff. I wear jeans every day. Throw out the image of a millionaire in your head and learn these 5 truths. I'm going to tell you this, guys. The car I drive normally, one of them has 170,000 miles. The other one has 210,000 miles. I don't own a lot of stuff. I don't either. And I don't wear jeans every day. I wear sweatpants or shorts. That's what I wear. I'm a step below her. And I don't know what she's worth. I don't, who knows? Doesn't really matter. If you were to 10x my wealth, I don't even know. I just don't care about driving the car. And this is why I don't care about the car. Like the daily driver. We are in a very sunny location. I like keeping the car outside. All it does is sun fade the paint. We also live in an area where they put sand on the roads. So we have rock chips. We have little sandblasting of the paint. I don't like paying for full coverage on a car. So I only do liability on our cars. So I own old cars. So liability only. Every single car that I own, which is 4 cars, I pay $2,000 a year in car insurance. My registration for each car is $58 a car. So that is how I'm saving money. I find value and I find mental solitude and clarity where I can park an old car somewhere and not have to worry about it. If it gets stolen, no big deal. If someone puts a dent in it, I don't care. Now, if I have a brand new car, I'm paying in registration between $1,000 and $2,000, somewhere in that range, probably around $1,000. And you're going to do full coverage insurance. So my insurance would probably be $1,500 to $2,000 on the car alone, that single car. And then I'm going to be worried about people denting it and ruining it and driving it in the winter, getting it sandblasted, leaving it outside with it getting sun damage, damage from the sun. We have very strong sun here. So all of those things I take into account when of the stuff that I own. To be more resilient, someone could not hurt me by threatening to hurt my car or steal my car. It's another way to not worry about anything. So that's something I don't have to worry about. I buy old cars. It says millionaires don't need stuff. Stuff like too many clothes, clutter, and extra, it only weighs you down. Stuff doesn't make you happy. Stuff takes your money. Stuff depreciates. I totally agree with that. Maybe she's in the same mindset that I am. I don't know. Millionaires find contentment elsewhere. When you're truly confident, you don't feel the need to continue buying stuff. You gain control of your temptations. You find contentment through gratitude. Millionaires prioritize investing over spending. To become a millionaire, you can't spend all your income. You must spend less than you make, and you must focus on appreciating assets which grow your money. Millionaires don't care what others think. You realize there's much more to life than impressing others. You find happiness in your own progress. You work on yourself each day. Millionaires embrace positivity. Negativity doesn't get you anywhere. Positivity brings you new people into your life, shows you new opportunities, is a better way to live. Yeah, I agree. Every millionaire made $1 million plus dollars. Number two, they didn't spend it. Everyone understands number one, but most overlook number two is they didn't spend it. Morgan Housel has a quote. He says, wealth is money that you haven't spent or you didn't spend. So that's true. And, I don't know. We'll see what happens with the money that I accumulate. We'll see. I mean, I'll spend some of it, but I'll probably just keep it because I just don't want to go back to a 9 to 5. It's the thing that I value is freedom. The thing that I value is my ability to do what I want when I want during the times that I have. And once you get that, once you attain that, you probably don't want to lose it. At least I don't want to lose it, but most people probably don't want to lose that. So money is the ability, or wealth is the ability to gain that advantage over others. It allows you options. It allows you the time and the freedom and the ability to tell people like, I don't want to do that. See ya. Like, you don't have to go get a job. You don't have to do what a boss tells you to do. You don't have to join something that you don't like doing for money. You just don't have to do it. It says, welcome to a banana republic. Financial conditions have experienced their most substantial 8-week decline since the bottom of the global financial crisis and the COVID recession. What sets the current environment apart? So this is U.S. financial conditions, 8-week change percent in Goldman Sachs U.S. financial. I don't know why it's way down here. It's way down here like COVID recession and great financial crisis. How are the U.S. financial conditions that bad? And this is the Goldman Sachs U.S. Financial Conditions Index. So maybe we are already bottoming out and we are starting to come up from that bottom. I'm trying to remain positive here, guys. That's what I'm hopefully seeing there. Here's another one that's crazy looking at the charts. So I was promised a crisis, and this is the financials breaking to the upside. I've talked about this chart before, the financials chart, XLF. But that's breaking a downtrend line to the upside. That is moving upward. So it's screaming no recession, at least at this time. This is another masterclass on value investing. So these are some of the things that are some favorite quotes from this person who's posting. He says, the most important thing in investing is being able to think independently, thinking outside of the herd. Exactly. Risk control is the essence of investing. And that's risk control is basically you wait for a good entry point and you buy it when it's very low. And the ratios is the way that there's two things that I use for risk control. It's buying when the ratios are cheap. So you've got a very good value in the investment that you're investing. I use technical analysis to time it as best I can. And then I also use portfolio position sizing, where the position size is also another form of risk control. So those are my 3 things for risk control. And then you can look at market conditions where you think these things are coming into favor. That's another form of risk control. So you think independently because you can't think within the herd. Otherwise, your entry points will be far more risky. Risk control is actually tied into thinking independently as well. A true leader is someone who has the courage to take a stand and the wisdom to know when to change course. The most successful investors are the ones who have long-term perspective and the discipline to stick to their strategy. And those are the strategies that I developed. are the things that I'm talking about, the three pillars. The greatest danger in investing is not the risk you take, but the risk you don't take. Success is not just about achieving your goals, but also about the person you become in the process. The value of a company is not just its financial performance, but also its culture and values. To be a great investor, you have to be a great learner. You have to constantly seek out new knowledge and be willing to challenge your own assumptions. So those are the best quotes from that guy, from a value investor. Sounds pretty legit to me. And then sentiment has now reached its lowest level in recent history as measured by net speculative position length in the oil markets. Traders are now more bearish than during the COVID lockdowns that resulted in the biggest demand shock in history. And the paper market is now only net long 12 hours of oil demand. Commodities bottom when sentiment bottoms. And I think we are about to bottom here very soon for net length, non-commercial oil market. So I think we're real close. Posted that the orange back test for oil would most probably hold. It did. Now back to back test same level again. Oil rising often starts off of recession. So I think what will probably move here shortly. In his opinion, he's looking for at least $250 to $300 a barrel of per oil during this bull market in today's value. Today's value. Remember, if that dollar drops, that price goes up. Palladium has an enormous 40-year parabolic base in the making. Another 21x move while going parabolic looks very likely. Huge bullish reversal candle, back testing huge support. The commodities bull is a get out of the rat race opportunity here. 2,100%, 2,100%, and he thinks another 2,100% is coming in palladium. If that does occur, I am positioned for it. That's where I'm going to end it, guys. So that's what I've got for today. Thumb up for the content. Subscribe to the channel. Lots of wealth stuff today versus other days. But yeah, it looks good. Hopefully you guys are progressing towards where you want to be in the future in terms of financially and health and spiritually or whatever else that you are going for. Hopefully you continue to make progress towards where you want to go. But that's what I've got for today. We'll catch you next time. This is Finding Value.